Good morning, good afternoon, and good evening. Welcome to the HODLNOTS Weekly Warm-Up, and we're back, and this is the 37th edition of that. We're going to be talking about some of the crypto news making headlines over the last few days. So let's just jump into that right away.
Yes, and Bitcoin dips further as Trump reacts to failed peace talks with 50% tariff threats against China. So maybe that's what happened, maybe not. But Bitcoin's price has slipped once again as US President Donald Trump made his first comments on the tension in the Middle East after the failure of the peace talks. In a post on his social media platform, the President of the United States said the meeting went well and most points were agreed to, besides the most important one, nuclear. He also warned that the US Navy will begin the process of blockading any and all ships trying to enter or leave the Strait of Hormuz. I have also instructed our Navy to seek and interdict every vessel in the international waters that has paid a toll to Iran. No one who pays an illegal toll will have safe passage on the high seas. We will also begin destroying the mines that the Iranians laid in the straits. So maybe that's affected Bitcoin, maybe it hasn't, but we'll have a look at the charts later on to see.
Absolutely. There will be another follow-up story on that a little later, also bearing in mind that a number of whales have also sold a bunch of Bitcoin tokens from a long time ago. So again, you guys know what we're going to say. We trade what we see. But let's just talk about crypto in general, because 6 months and 3 days ago, that is when crypto really crashed. You guys remember the October crash? Well, have the markets improved? Are the bears still perhaps in charge? So the October 2025 Bitcoin and altcoin crash may have ended the bull market, but its long-term impact on market health may have been overstated. Now, the Bitcoin order book depth has plummeted by 50% since September 2025, signaling a substantial decline in overall market liquidity. Now, indicators suggest that the current market fragility stems more from recent 2026 trends than from the 2025 flash crash itself. Bitcoin and crypto markets took a massive hit on October 10th, 2025, almost exactly 6 months ago. Now, that devastating flash crash wiped out a record-breaking $19 billion in leverage positions, while some altcoins collapsed between 40 and 80%. Now, many traders have speculated that multiple market makers had been wiped out, while others accused the Binance exchange of blatant manipulation. Now, Bitcoin's aggregate order book depth, which ranges between plus 1% to minus 1%, typically oscillated between $180 million and $260 million in September of last year. On most days, there would be about a healthy $90-odd million in bids, but that was not the case on October 10th, 2025. Now, a mix of technical issues at Binance and auto deleveraging on decentralized exchanges caused a temporary liquidity lapse. Now, during the flash crash, Bitcoin's order book depth entered a downward spiral, stabilizing somewhere around 150 million by mid-November, sure. But currently, Bitcoin's order book depth seldom exceeds between 130 million thereabouts, which is down 50% from levels seen in September last year. We talked about that to up to $260 million. Now, the already fragile market conditions have deteriorated further as of February this year. And Bitcoin's order book depth has plunged below $60 million for nearly 10 days, as the price has struggled to hold above that $65,000 level in these last 10 days. Now, the cryptocurrency market volumes have also declined considerably. So it's a little bit of a recap in the last 6 months. We know that a lot of liquidity has exited the market, as well as specifically around Bitcoin. And these geopolitical events don't help matters much. But we're still going to trade what we see. And we do know that there have been a great bunch of runners from scalp trading and HODL positions as well. So at the moment, we don't know where the market is going. We don't know what else is going to influence market, but we can trade what we see. Yes, we will look at the Bitcoin chart shortly. But now let's move on to the next story.
Yes, we are taking advantage of the running coins as a scalper and as a hodl flyer. And someone else who is taking advantage of these dips and dips and dips is Michael Saylor, who is back in the news because he is signaling that he might buy more Bitcoin. So Michael Saylor has signaled a likely new Bitcoin purchase by strategy after posting familiar acquisition cues on 12 April as Bitcoin pulled back from the 73,000 mark to around 70,000. So the executive chairman shared a chart of the company's historical buys with the caption, "Think bigger," followed by "back to work," a phrase that he has consistently preceded purchasing announcements since strategy began accumulating in 2020. The timing places the signal during a market dip, with Bitcoin trading at about 5,000 below the firm's average acquisition cost of 75,644. So he keeps taking advantage of all these Bitcoin dips and he just buys more.
Absolutely. Again, whether you guys are scalp trading altcoins or whether you are trading Bitcoin as well, using the HODL fire, that's not a bad idea. Some people I know are buying $5 a day of Bitcoin, irrespective of what's going on. Now, it's not quite the same level as Michael Saylor, but it's one way to deal with the market. Now, speaking of dealing with the market in current situations, the follow-up on my previous story. Now, some of you have heard in the news as well that Iran has been asking a toll, about $1 a barrel, must be paid in Bitcoin. But paying Iran in crypto for this could put shippers at sanctions risk. What does that mean? Well, crypto's transparent ledger makes sanctions evasion easier to trace, allowing authorities to track and potentially freeze illicit flows. Shipping firms that turn to cryptocurrency to pay potential transit fees to Iran could face significant sanctions exposure, according to Caitlin Martin, who's a senior intelligence analyst at Chainalysis. Now, she told according to Telegraph that under the current sanctions framework, any payments made to the Iranian regime, including those tied to passage through key waterways, could be interpreted as material support, putting companies at risk of violating US and international restrictions. She further says, doing so could carry significant sanctions and violation risks as the Iranian Revolutionary Guard Corps is sanctioned by multiple jurisdictions and Iran is subject to comprehensive sanctions by the United States. Now, the warning comes amid reports that Iran may seek to collect transit fees in cryptocurrency. Now, while there has been no official confirmation, US President Donald Trump has said that he would not accept any attempt by Tehran to impose tolls on shipping through the vital waterways. Tehran has already expanded its use of digital assets, particularly stablecoins, to facilitate trade in oil, weapons, and commodities based on publicly available data. Now, however, Ms. Martin said she noted that cryptocurrency is not a foolproof workaround for sanctions. While it does enable cross-border transfers outside the conventional financial system, blockchain transactions are inherently transparent and leave a permanent record. So interesting times, most people would avoid sanctions, most countries would avoid sanctions through other financial means, and they're turning to the transparent blockchain ledger. Interesting how things have evolved in time. Vicky, back to you.
Yeah, I don't think a lot of people realize that the blockchain is probably with the one of the most transparent ways to do business, but leave that to the experts. In other news, if you were trading this weekend, you might have seen DOT, and it's the native token of Polkadot, and that actually plunged 7% in a couple minutes because hackers exploited a Polkadot bridge to mint 1 billion tokens. So Polkadot's native token plunged over 7% in minutes after reports emerged that a hacker minted 1 billion tokens on the Ethereum mainnet and sold them off. The asset traded at $1.24 before it plunged immediately to $1.15, but managed to recover some ground and now, or was, trading around $1.20. So Arkham reported that an unknown hacker minted 1 billion DOT on Ethereum and sold them straight away into the liquidity pool. So Look on Chain confirmed the exploit and the attacker's profit, which was about $237,000, which is about 108 Ethereum. The attack has been blamed on a vulnerability in the Hyperbridge gateway, which allowed the bad actors to forge messages and manipulate the administrator of Polkadot token contract on Ethereum. So even though all this security is around it, there's the blockchains are still getting hacked. So that's what happened if you watched Polkadot plunge the other day.
Absolutely. All right. Always be vigilant. We can't control what these hackers are doing, but we do remind you all to be very vigilant regarding transfer of your own tokens, but we can't control whether these large chains do get hacked or not. Moving on, also back to US President Donald Trump and hacked, well, hacked off maybe is what a lot of the investors are feeling right now, especially around some of the Trump-linked tokens and them crashing. Now, United States President Donald Trump is facing renewed scrutiny as crypto tokens and projects he's touted have crashed to all-time lows or sit near record low levels. Now, the official Trump token, Trump, is a meme coin pushed by Trump, hit an all-time low of about $2.73 in March this year and is currently trading at about $2.86 according to data from CoinGecko. Now, the governance token, also issued by World Liberty Finance, WLFI, a decentralized finance platform co-founded by Trump's sons, sank to an all-time low of just 0.07 cents on Saturday. Now, WLFI is down by nearly 75% from its all-time high of about 31 cents reached last year in September, while the Trump meme coin is down by about 90% since the all-time high of over $73, which reached earlier in January of last year. Now, President Trump has also announced another gala for token holders scheduled to take place on April 25 this month, fueling renewed scrutiny from US Democratic lawmakers who have accused Trump of influence peddling by giving token holders presidential access. So this is an interesting story. It just goes to show that political influence can't always benefit you, but regardless, they're in the news and they're trying to work that angle. For us, what angle do we work? Something is running, we trade it regardless. Back to you.
Exactly. Now, the next story, we've talked about this quite a bit in our happy hour hangout, and it has been in the news, and it's about quantum computing. So, quantum computing has been in the news and it's been talked about lately, and a lot has been said over over the years about quantum computing and if it's going to be able to hack blockchains and things. Now, it's not fully here yet, but many industry experts believe it could be threatening to numerous cryptocurrencies because it uses algorithms like Shor's to break the public key cryptography, that secures them. So a powerful device in theory could reverse engineer the private keys from public keys, allowing the attackers to steal funds, while Grover's algorithm could undermine mining security and enable the 51% attacks. But we're going to have a look at now which cryptocurrencies are under the biggest threat. And it's probably the ones that you've heard of a lot. Now, Bitcoin, we're going to talk about Bitcoin. So Bitcoin, they say, is the most exposed, but it is the most understood as well. So Bitcoin appears as the most susceptible to the quantum threat as it uses something called ECDSA, which is directly breakable by this quantum computing algorithm. So the danger is even greater when it comes to old dormant Bitcoin, as they could already be exposed. The positive news, though, is Bitcoin's proof of work is not directly breakable and only signatures are at risk. So the way it's mined is not breakable, but the actual wallets could be. Now, this is all theoretical. Don't go out and try to secure your wallets just yet, but this is theoretical and we do have to think about it because computers are getting smarter and smarter. So Ethereum also has high exposure and it has a bigger attack surface. So the quantum computers could crack the top 1,000 largest Ethereum wallets in just days. Not from today, but if they tried to hack them, it actually would only take about a day or two to hack. So Ethereum could even be more exposed than Bitcoin structurally, as it has a much larger attack surface. All of the niche within its operation, from smart contracts to DeFi protocols to validators, bridges, and layer twos, could be at risk. And finally, they talked about XRP, which is actually the least exposed relatively. So although XRP uses elliptic curve cryptography, which makes it vulnerable, it was determined that it's the least exposed out of the three, given its usage model and different architecture. So the faster transaction finality results in smaller attack window, and it also relies on smart contracts, has a lower DeFi complexity, and its validator ecosystem is more controlled. So it's really good that they're starting to figure out which blockchains might be vulnerable, because then the blockchains can have time to actually stuff those little vulnerabilities up so it can't get attacked. It's actually interesting because quantum computers are getting very smart now.
Absolutely, and throw some AI in as well. And obviously, as something becomes more publicly understood and obviously financially viable, hackers are going to look for all kinds of ways to get in and out and take advantage. But interesting times, we are living through a time of evolution as well. Now, speaking about time, well, it was 6 months ago, almost to the day, that we saw the October crash. It was 2 years almost in this month when the last Bitcoin halving happened. You guys remember that? We did a whole big thing on the HODLNOTS Happy Hour Hangout, all about that. Now, going forward, those in Bitcoin, especially the miners, are going to be having an even tougher road. And we're not just talking about the fact is that the reward for mining the blocks is going to be halved. That's what the whole Bitcoin halving is. And we've also seen a lot of the Bitcoin miners selling off and actually turning to AI data centers, finding more lucrative. But these miners are heading towards 2028 with that halving, with thinner margins, tighter power markets, and a growing need for capital and discipline. Now, Bitcoin's fifth halving is roughly 2 years away, and the mining sector is heading into it with far less margin for error than in 2024, as higher costs, tighter energy markets, and clearer regulation reshape the industry. At the last halving in April 2024, Bitcoin traded at about $63,000 as rewards fell from 6.25 Bitcoin to 3.125 Bitcoin per block, according to CoinGecko. Now, in April of 2028, the next halving, miners face higher input costs for half the new coins as rewards drop down to 1.5625 Bitcoin. That looks tougher in a world of record hash rates, higher energy prices, and more selective capital, as well as you guys might have heard a couple of weeks ago where there were power failures in the States, and that definitely affected the miners and a bunch of other things. So we will be talking more about Bitcoin halving in the future as well, because while it might not directly affect us, it is something to consider overall in the industry, because we have far less miners. Who's going to be doing the mining? Right, we know there is a limited supply, and we won't be alive, unfortunately, ladies and gents, when the last Bitcoin is mined. It's 22,100 and something, or whatever what year it is. But it does affect overall market stability and the availability of tokens, supply demand, and things like that. So we will talk about that probably in about a year's time again as we touch on that story. But let's get into the last story of today's Hot and Last Weekly warm-up.
And this is something that could affect us now, actually, because a fake ledger app on Apple Mac's App Store cost a musician called G Love nearly 6 Bitcoin after he entered a recovery phrase into a malicious software fake, basically. And the stolen Bitcoin was worth more than $424,000. So on April 11th, he posted on X, and he's known as singer G Love. He explained the loss while he was moving his ledger setup to a new Apple computer. And most of us have done that. You have your ledger and you might be moving it or getting a new ledger, and you have to put your seed phrase in. But he explained that the incident occurred after he searched the App Store for Ledger Live, downloaded an app that looked authentic, and followed its prompts. The app then asked for his 24-word seed phrase. As soon as he entered it, the attacker drained the Bitcoin. So possibly what you could do or should do is go to the website that you should be like the Ledger website and then click the link there. Don't go directly to the Apple store or the Android store for that matter, because that's something that could affect it. They're so good now. They look so real, don't they?
Absolutely. And also just make
Mm,
sure that the website that you are interacting with is indeed the correct one. All right.
yeah.
Don't just click on
Mm,
an
mm,
email link or whatever it
mm.
is. Double check, make sure that it is a secure site. Ladies and gents, not your keys, not your crypto. Please make sure that you're always transacting safely. Speaking about safely, are we on the rise? Where are we at in terms of fear and greed index?
Well, the fear and greed index, interestingly, is actually only at 12. So even with the little push upwards that Bitcoin had last week and into the weekend, traders are really still quite fearful. So let's actually look at the charts to see what is happening with Bitcoin.
Absolutely. So, yeah, we, as mentioned, we have seen Bitcoin go up to a fairly healthy 73,000. And we've been hoping ever since last week or the week before when we were speaking about it, we had mentioned we wanted to start to see Bitcoin closing up above this area here, 72, 73. We know there is some insane resistance, as previously spoken about in and around that $74,000, $75,000, which was historically really good support until it wasn't and broke down below. At the moment, I really like to see Bitcoin close today, if possible, at least during this week, in and around the 71, 72,000. So we can start to see some building up of support. And as seen here in this chart with the HODLNOTS indicator, are things starting to slowly swing around? We're starting to see a slowing down of that downwards trend of those trend indicators, as indicated by these colored lines. And we just slowly need to see a little bit of a build up from Bitcoin to start to see a little bit more push up, continue to push up. We start to see these trend lines start to angle up, and you're going to start to see this thing over here flip over, hopefully back to green, which we haven't seen hitting green for quite some time. We saw a little bit of a push back here when we saw hopefully Bitcoin was going to try and reclaim that 100,000. Unfortunately, it didn't make it. That was also in and around the time of more tariffs that were announced. And we saw a lot of whales selling off. But in the meantime, a little bit slightly more optimistic look at the week. I mean, if we have a look at just general altcoins and stuff, both from Binance and Mexi here. Some really great runners of the last couple of days and weeks. Great for scalp trading, great for HODL fire trades. Some of them that we've spoken about with our graduates and on our calls that have been running Giggle, Bien Rong Shong, Play, and a whole bunch of others as well. And hopefully our traders have been taking profit. Speaking of, if we have a look at that neon green HODL fire, we do see that there is a temporary pivot. Now, what would make that disappear? Well, it's a good question, and it's something that we do talk about on the free HODLify course as well as with our graduates. But if you are looking to farm Bitcoin, again, you would follow a strategy, pivot bottom, perhaps in a buy tag. Are you waiting now for the sell tag to take some of your profits from when you bought it back here? Well, that's up to you. Always do your research. But yes, we are expecting a little bit more optimism this week, as long as there isn't too many further developments around the geopolitical turmoil happening between the US, Israel, and Iran wars. But at the moment, trade what you see, ladies and gents. Even if we're in a bull market and things are flying, don't anticipate things are going to go to a certain level. There's no guarantee, especially in this current landscape. So be cautious, be careful. All right, let's jump into what all is happening in terms of calls for HODLNOTS and general Bitcoin Tough members this week. Tell us more.
This week is actually jam-packed, and a few calls have moved around this week. So there is the start of the week, which happens normally, but before that, we're going to have more large calls this week. So they're either going to be coffee chats, and if you're a hot or not, you know what that is. It's a little informal chat that we get together and we answer questions and we talk about topics. So we're going to have a few of those this week, and they will be at 11 a.m. UTC. So that's actually in about an hour and a half from now. And that will be followed by our self-paced course call. So that is anyone that's doing the self-paced course, please jump on. That is at 12 p.m. UTC, and that is if you are busy with chapters 1 to 3. So New thing already, the lodge call at 11. Now, there has been a schedule change for Wendy's calls as well. So normally she does her calls Tuesdays, but she is changing it up. So every other week now, one of her lodge calls will be Monday at 7 p.m. UTC, and that is this week. So it is in the Certified Academy if you're not sure. So her lodge call this week will be today at 7 p.m. instead of tomorrow at 7 a.m. So jump on there if you have any questions about scalping. And then tomorrow, which is the 14th, that will be our self-paced, another self-paced call. That's at 5 a.m. UTC. And that's for anyone that's doing any chapter or module in the self-paced course. You can jump on that at 5 a.m. UTC. And then we are doing another large call on Tuesday. So this will again be either a coffee chat or some topic, and that will be at 11 a.m. UTC. And all of these will be in the Certified Academy, so you don't have to remember them. And then that will be followed directly at 12 p.m. UTC by our HODL Fire graduates call. So this is anyone that has graduated from the HODL Fire course who is in the HODL Fire course chat still. That's at 12 p.m. UTC on Tuesday. That's the 14th. And then that is followed by another lodge call on Wednesday. So we're having the lodge calls Monday, Tuesday, Wednesday at 11 a.m. UTC. Again, please jump on, talk to us about the market, talk to us about anything scalping. Just get together and we'll see what we can do together, really, because that's what it's all about. So that is another one at 11 a.m. UTC on Wednesday. And then the first of the HODL dot calls will also be on Wednesday. So if you are doing the 3M challenge, you can jump on the HODL dot calls and get help with whatever level you're on, yellow, pink, purple, green, red, whatever dot you're on, you can jump on there. That's 9 p.m. UTC on Wednesday. And then we are having another HODL Fire call, but this one is for anyone who has the HODL Fire indicator. So if you have that, you can jump on the Thursday, which is the 16th at 6 a.m. UTC and ask any questions, and we'll be finding some coins. So that is anyone for the free call, which is part of your HODL Fire subscription. And then that is immediately followed at 7 a.m. UTC by the second of the HODL dot calls. And that is Liesel this week. So you can jump on and have a chat to Liesel and ask her any questions. And then another special thing that's happening in the lodge this week is Graham. So if you don't know who Graham is our black bear, one of our black bears. And he is actually going to talk about the way he trades because a lot of us see him in the lodge posting, and he's going to jump on a call. And that will be, I believe, at 8:30 a.m. UTC. It will be on the schedule. And then the week ends as usual with our last of the self-paced course calls for anyone that is on chapter 4 onwards. So the lodge is actually jam-packed this week with calls. And if you're not sure if you didn't hear me or if I went too quickly, they will be on the Certified Academy schedule. So jump in there and figure out your week. And actually, we have two more things that John's about to tell you as well.
Well, one more thing, but we're happening
Oh,
twice.
yes, true. That
So
is
we're
true.
bringing back the HODLNOTS X Spaces as well, and this is a convenient way where you don't have to jump onto a Zoom with video. You can listen in on your car while you're at work, sneakily, or whatever it may be, and that will be starting again tomorrow, as well as on Wednesday, and that's going to be at 9 a.m. UTC. So roughly around this time, we'll be live on X, and we'll be talking about the market. We'll be perhaps teaching one or two things, but we'll also be answering questions. We'll talk about the crypto states ready at the moment and trading, scalp trading, HODL Fire trading, and any other things that really pop up on that. It's live. You guys can jump on. We'd love to see you. They are recorded. We'll post out about that. So we'll send out the link. Hopefully we don't have any gremlins again, but we'll post out the link for when we're going to be going live. And that again is tomorrow and Wednesday at say 9 a.m. UTC. All right. So around this time, tomorrow and Wednesday. So join us for that as well. Cool. So busy week, lots going on. All right. Markets might be turning around. We're trading what we're seeing. We've got some exciting calls for both our scalpers, our HODLNOTS certified, as well as for those doing the HODLFire or using the HODLFire indicator, both the graduates and for those free. So do jump on. We do teach a lot on the one, less so on the other, but we're able to answer your questions and so that you can learn how to best take advantage of any coins running right now in the market. There is plenty of opportunity. Speaking about opportunity, this is your last opportunity to say something, Vicky, and tell us what is the thought for the week as we go forward.
Yes, the thought of the week is actually in honor of a dearly beloved couple, actually, that has been with HODLNOTS for a while. They've been outside of HODLNOTS for a while now, and they're on the call, so hello. And we miss them, so we're glad to see them back. And it's a positive affirmation, or not an affirmation, a positive thought that don't think of this as a sideways market or a flat chart. Think of it as technically consistent performance. Consistently sideways.
That it is, but we do have opportunities to take profits, make profits, take percentages every single day. Well, who knows when this market might actually run and break out of its sideways, consistently sideways motion. So let's get there, go trading, learn some more, skill up, and we'll catch all of you guys on a number of calls this week. Otherwise, same time, same place, same link next week, Monday. Until then, ciao, ciao.